Hi, Ian here again. Now we're going to look at a high volatility day and seeing how to trade it the very next day after it. The chart we're looking at here is the British pound US dollar. It's on a daily price range, therefore each vertical bar represents one daily bar. And the date is the 26th of November 2013 and the time is 10:15 UK time AM in the morning. Now, the first arrow you see here is indicating a small range day, a low volatility day that we've already talked about. But what I'm going to look at with you today is this high volatility day, or what we call in price action trading an outside vertical bar day. Why is it an outside vertical bar? Again, I've showed you it is a higher high than the previous day's high and it is a lower low. It's a bearish outside vertical bar because in this instance it's closed below the mean. The close is closer to the low than it is to the high, and also that confirms that it is actually closed below the open. Now you can see that this bar here was formed yesterday, which was the 25th, Monday the 25th of November. Today, Tuesday the 26th, so far at 10:16 AM, we have traded within the previous day's range. Quite often this happens when you form a large volatility day in the preceding day. But our objective with an outside vertical bar to the downside is obviously the previous day's low being taken out to the downside. As we speak, this has not happened. The previous day's low was 161.32 or 323 to be exact. So just to round it up, we call it 161.32. As we speak, the market's trading at 161.73, but the market has traded, if I click on that there, it'll give me a high price here. The market is traded at 161.93. So remember what we're looking to do today. We're not looking to buy this market, we're looking to sell based on our price action objective of the 161.32, the previous day's outside vertical bar to the downside being taken out, and we know that we've got a high probability of that happening based on our price action analysis. Does it mean it's going to happen? Obviously it doesn't, but the probabilities are within our favor, and it is our methodology and our manner in which we trade. So what I'm going to do is I'm going to flick over now to an intraday chart. And in this instance, I'm going to look at it just happens to be a 4-range chart. Now, what does this mean? It means that I'm looking for a lower low and a lower high for me to be able to sell this market with a very objective stop in case the market is one of those days that it continues to go higher or maybe trades higher towards the previous day's high. But in this instance, you can see that now the 26th of the 11th, the market moved down a little bit, rallied on up. Didn't take the previous day's high out because the previous day's low, because the previous day's low was 161.32. It did go to 161.45 and it rallied. Where did it go? And remember, this is real time at 10:18. It's went up to a high here at 161.93. It came back down. It came back up. Come back down a little, back up, and I've put a horizontal line along the top here just to indicate what you want to call like a double top, triple top, whatever you want to say, but you can see that there's a little bit of resistance here. So what I'm looking for is to take a sell signal based on a lower high. Now, something that we haven't discussed in these presentations, and it is something that you only can actually learn by buying our home study manual or going to one of our seminars, is our vertical bar trading pattern. And each market in each time frame makes a vertical bar trading pattern. Now let me assure you that the vertical bar trading patterns we're talking about are not flags. They're not head and shoulder patterns. They're very plain to be seen vertical bar trading patterns. And what they do, or what we do, is actually we have a precise bar in which qualifies a vertical bar top being in place or a vertical bar low being in place. Now, in this instance, our qualification is roughly round here. So it's just actually, to be quite honest with you, I've shorted this market, and my sell signal, or the short signal that I've taken, is just below 161. It's around 161.85, with my stop being above the high, which is 161.93. Because again, who am I to say that this market's not to go up closer to the previous day's high? Who do we know even? We know the probabilities are in our favor that it will break the low, but it might not break the low. We don't know. The only thing that we can determine as traders, and remember this very importantly, is we only can determine from the outset of our trade is where our stop's going to be and what our potential loss can be. So again, the market is now moving down beautifully here at 161.70. Our price action objective based on the daily chart is to take this particular low out, and this particular low, again to reiterate, is 161.32. we're trading at 161.70, so we've got a price action objective of at least to take this previous low out. Now again, if you were taking your signal just off the daily chart and you were taking your signal in here at the previous day's close, which happens to be 161.45, I believe, around there, let me just check, 161.54, you're still short in this market. Your stop's above the previous day's high, which is 162.39. So providing you have got an account size and providing you're trading within your price rules and your trading plan and your money management, you are able to trade off the daily bar with the stop being above the previous day's high. But remember that one of the advantages of perhaps waiting to see what the next day's action can be is that you can actually place a trade to go short based on the previous day's bar, but with tighter stops. Because remember, your stop objective is obviously, if you're taking it off an intraday chart, what your price objective is obviously to take it off the signal bar that you take your trade from. And in this instance, my signal bar, or my signal range bars, my intraday bar has been the 4 range bar, and the high of that 4 range bar, based on a lower low and a lower high, I've taken a sell signal based on the previous day's outside vertical bar to the downside. Now, it is now 10:22. The market's trading at 161.67. You know where we are in the market. Let us come back to this in a couple of hours' time, and we will update the situation to see has it achieved its price action objective based on the previous day's daily bar, outside vertical bar to the downside, negative outside vertical bar to the downside. Let us see. Thank you in the meantime, and we will speak later. Thank you.